All right, today is September 16th. It is Wednesday, and this is the end of day review for the live trading room. So it's been a really strong day for us today, a very interesting day. We've had quite a few trades. There's a couple key things I want to point out to you. If you've been following along with us in the end of day reviews or the live trading room, you know that we trade the adaptive entry system. We trade the four signals that represent momentum signals, consensus signals, and then also trend bias and continuation signals. These represent an interpretation of what the most immediate market activity is. We're trading these on the NASDAQ 100 futures, that's the NQ contract, and we primarily focus on a 5-minute chart. So what we do is we track the performance of every one of these trades as we are trading them live here in our live trading room. And we have various start times that we evaluate the performance of all the way back to 3 a.m., but that's not practical for somebody who wants to be sitting in front of their computer trading unless you're outside of US hours. But it is important data for us eventually to take a look at for possible auto trading. 7 a.m. is a constant for us in terms of a good start time. We have several people in our community that will start trading at 7 a.m. Eastern. We have a whole group of people that will start trading when the regular market opens at 9:30 a.m. Eastern. And then what we do is we track the performance, the time of every entry, whether it's long or short, what signal was provided to us, momentum trades, continuation, consensus, fractal trades, and we track the profit or loss. Now, in the last few weeks, we've been actually looking for an opportunity to lock in 5 points of profit once we are in a trade. And the reason is because we've seen a pretty strong move to 5 points, it's maybe slightly beyond, but not always a commitment to get to our desired profit target of 10 points. So you're going to see a lot of trades today and yesterday that we did 5 points of profit on, and this is really what I'm going to show you is really how powerful locking in a simple 5 points of profit can be. 5 points equates to $100 of profit per contract. It's $20 a point on the NASDAQ futures, so 5 points is $100 per contract. So we track a couple of different categories though. We break down all of the data and we break it down and then report it to you in the form of a personal trading plan. So the personal trading plan is this tool that we developed to help you do a full income or financial forecast for your trading business. Each of you is a small business owner of your trading business. And by using this tool to assess what our average run rate is, what's the average rate of our profits, what's the average rate of our losses on a daily basis, what's the frequency of our losing days versus winning days, and if we were to continue to operate at that same run rate going forward, what would our income be? So we have about 10.5 weeks that we have been recording this now. Here at the end of the day in the live trading room, we have a 52-week forecast. So I'm going to come back to this and I'm going to plug in today's performance here in just a few moments. But the data that I'm plugging in there is going to be based on two different methods of trading. One is taking all of the signals that are presented. That's the consensus signal, the continuation signal, the trend bias signal, and the momentum signal. Taking all of those and only trading from 9:30 to noon. We have a fair number of people in our community that want to trade, but a limited amount of time. So how well can you do? We help you see that in the personal trading plan. Today, trading 9:30 to noon, taking all the signals, we accomplished 60 points. So we took 60 points. That's $20 a point. So that's $1,200. We took 11 trades, and this is a key right here. This doesn't happen very often, but today, locking in 5 points, taking each of the signals, we had a 100% win rate. 9:30 to noon, we had 0 losses. That's a really strong testament to the power of the adaptive entry system. There's other days where we've had 100% wins. There's days where we've had lower rates, down into the 60% range. But I'm going to show you what the overall average is. We try not to be too preoccupied with a single day or even a single trade. We just want to take the signals, and we want the overall performance results to fall naturally where it should. The other category which we are monitoring is the 7 a.m. to 4 p.m. category, starting at 7 a.m. and taking only the trend bias trades and the continuation signals. So that's leaving out the consensus, leaving out the momentum signals. And by the way, I mentioned fractals a few minutes ago. Any fractal trade that we take does not get included in these numbers just yet. We're still evaluating fractals, but fractal trades are kind of a bonus on top of what we're currently trading. So in this category, we actually had 60 points. Also, 15 trades. We had a 93% win rate. That's a very strong win-loss ratio. And those are the two categories that then we do a full 12-month, 52-week income projection on. So I'm going to start with our 9:30 to noon, and I will plug that into the personal trading plan. So the 9:30 to noon, taking all of the signals. Today is Wednesday, September 16th. Go over here where we enter the data. So we took 60 points today. Now 60 points at $20 a point is $1,200. So 60 times 20, $20 a point is $1,200, and our personal trading plan has scaled us up to trading 3 contracts. So we multiply that 1,200 times 3, and we took $3,600 of profit today. Okay, it's just got to think for a second here. Then we took 11 trades. We took 11 trades, and 3 contracts per trade is 33 contracts. So that then takes into account the expense, commissions, and fees for trading. So our net is just under $3,500 today after fees and commissions. Now, the most important thing here at the end of every trader's day is to update your 12-month forecast. We are 10.5 weeks through a 52-week period. 10.5 weeks. Our current average, let me go back to this. We're 10.5 weeks through. Our forecast, our 12-month forecast, assumes a win-loss rate of losing on an average 1 day out of every 5. Losing 1 day out of every 5. Now, we're 10.5 weeks in, and we've actually had 17 losing days. So the frequency of our losing days is slightly higher than what our plan, and so we need to adjust our go-forward forecast to accommodate that. That isn't necessarily a super negative thing. It just adjusts our forecast. It just says we might actually have a slightly smaller projected income than what it would be if we were right on plan in terms of the frequency of losses. We just want to take it into account, and I'm going to show you how you can actually increase the probability of your income in 12 months, even though the run rate might be less favorable than you desired. Taking into account the frequency of losing days, our winning days are averaging, our average winning day is averaging 23.17 points a day. I want to make sure that my go-forward forecast for everything beyond today, for the remaining 42-ish weeks, is set to the current run rate. So I'm going to put in 23.17. 26.05 is the average losing day. So I'm going to put in minus 26.05. And so what that does for us now is it says, listen, we have established a run rate where we're averaging just over 23 points a day for our winning days, and we're losing 26 points on our losing days, and both of those numbers take into account the fact that our frequency rate of losing is slightly higher than what we had ideally planned, okay? But that's now real trading. What you do at the end of the day after your trading is you put your numbers in here, you adjust your forecast, and then you look to see what your 12-month income forecast is. Based on having started with $5,000 in the account and this current run rate projected forward, with capping our maximum number of contracts at 3 contracts, we have the potential of just over $200,000 income for this 12-month period. I think that that's pretty significant considering we started with $5,000. Now, if you're a little disappointed because perhaps your run rate is not quite as strong as you had hoped for, you can always adjust the maximum number of contracts. So if I wanted to adjust from 3 contracts to capping out at 4 contracts, it will let me do that. I just need to lock these in here. Oops. I need to lock these in before I do that. And this is just done so that if I play around with a number of contracts, it doesn't go back and recalculate days that are already closed. Okay, so we had capped at 3 contracts. Now, if I decided I wanted to cap at 4 contracts, it actually increases my potential income for a 12-month period by about $56,000. So would I feel comfortable increasing my maximum number of contracts from 3 to 4? Well, the only way you would increase the number of contracts, the way the program is designed, the way the program is going to offer you 4 contracts to trade, is as long as there is, as long as the required margin for those 4 contracts is less than 10% of the balance of your account. So we have this limiter in there that says we started with $5,000 and we will allocate up to, but no more than 10% of the balance of our account as it grows to margin. Each contract where we trade requires $500 of margin. So 4 contracts would require $2,000 of margin. You need $20,000 minimum in the account in order for the personal trading plan to graduate you, scale you up to 4 contracts. And you can do the same thing with 5 contracts. You can do whatever you want here. You can do 10 contracts. There's a limiter. You see, if we put 10 contracts in, it's only allowing us to trade 6, then 7, then 8, maybe then back to 7 because we have a planned losing day in there. And then we finally get up to 10 contracts. But that's only because there is sufficient capital in the account that 10 contracts will not exceed 10% of the balance of the account. But you can see that by playing around with the number of contracts, adjusting it, you can dramatically increase or decrease the total income for your 12-month period. Now, that doesn't guarantee anything. It doesn't guarantee that you're going to have that level of income. It's all going to ultimately be based on what your run rate is. And that's why it's so important at the end of every day to plug in your performance so that you can keep a current forecast in place based on your run rate. So that's one category. The second category we track is based on taking only the trend, bias, and the continuation signals, not taking the consensus signals and not taking the momentum signals. We also did 60 points today. So again, 60 points times $20 a point is $1,200, and we have also scaled up to 3 contracts here. So $3,600 is the profit today, and we had 15 trades at 3 contracts per trade, so it's 45 contracts. And so we do exactly the same thing. Now the numbers are going to be different here because this is an entirely different category. First of all, we're trading from 7 to 4. Those are Eastern times. The other category was 9:30 to noon. Here we're only taking trend and trend continuation trades. The other category, we're taking all 4 signals. So you're going to have different dynamics. I'd like to show both of these so that you, as an individual trading business owner, can decide which works best for you. And you're not limited to just these 2. I'm just showing you 2 different variations. All right, so our average winning day is 34.96, so almost 35 points. And we have a loss run rate that is right in line with what our original plan was. We've had 10 losing days out of 10 and a half weeks. So I'm going to take this number, I'm going to round off a little bit. I'm going to just say 35 points is our future forecast for our winning days, and minus 22.64, I'm going to leave that alone for our losing days. So what that shows me is if we leave our maximum contracts at 3, we have a $359,000 potential income. So you can see there's a slightly different dynamics between the two. Trading from 7 to 4 requires more of a time commitment, but you're only trading 2 signals instead of 4. Trading 9:30 to noon, you're trading all 4 signals, less time commitment, but you have a smaller run rate. But either of the overall results can be influenced by the maximum number of contracts you're willing to cap out at. And of course, that is limited, first of all, by your margin requirement being less than or equal to 10% of the balance of the account. So pretty excited about today's performance. I mean, we've been in a range of days here. You can go back in this category, the 7 to 4 trend bias only. We had 2 back-to-back losing days, and in fact, on the 10th of September was the biggest losing day we've had in 3.5 months of trading. So I like seeing what those tails are, the biggest winning day, the biggest losing day, because everything in the middle is giving me a realistic average of what I could expect from my trading. And then, the last 4 days have been some nice winning days, especially with a 75-point day, and then 3 days later, a 60-point day. So to me, these are just numbers, folks. The key to being a successful trader is to zero in on understanding how to properly trade the adaptive entry system and trade the signals, and then decide what variation of that you want to trade. If you want to trade right along with us NQ with 5-minute charts and you're taking all the signals, that's fine. We're going to help you do that here in the live trading room. But you owe it to yourself to include the adaptive entry system in your toolkit for your personal trading business. Trade, trade, trade. Don't let any one individual trade put you off. Trade the signals, and then at the end of the day, come back to the personal trading plan, plug in your performance, and look at your overall success or struggle as a bigger picture view, a 12-month view. And if you feel like you're struggling, then you can ask us for help. You can dig in to some additional education. We're happy to help you in the live trading room or through some of the courses that we offer to help you learn how to trade. It's not really complicated. It really boils down to the simple science of market metrics, and thanks to Craig and his team at New Cycle Trading, who created the market metrics that interpret the behind-the-scene patterns and historical biases that allow us to actually just simply identify a red vertical line to go short, a green vertical line to go long. It's really that simple. But there's a lot of science behind it. And then after that, it's just simply the math of putting your performance into a tool that's going to help you calculate what your run rate average is and what that run rate average looks like on a 12-month forecast. Right there, you have the two most critical aspects of building your own personal trading business, and knowing within a reasonable range what your income can be over a 12-month period. I rarely meet a trader who actually knows what their income is going to be. It's all based on, well, it depends on what the market's going to do, and it depends on this, it depends on that. And actually, it doesn't. The signals are the signals. The signals are going to interpret when there's a volatile market. The signals are going to interpret when there is a less volatile market. Your performance is going to run in some sort of a range around an average. And so if I were to look at the averages, for example, we track all of this. In the 9:30 to noon category, we're actually averaging over a 67-day trading period, 67 trading days, we're averaging just over 21 points a day, 21 and a quarter points a day. Well, that's a pretty solid average, and that's something that you could look forward to matching or mirroring and perhaps exceeding. But it gives you a guideline as to what a reasonable expectation could be. Now today, we did 60 points, all right? We blew away the average. That's awesome. I love that. Today in our 7 to 4 category, we did 60 points also, but our 67 trading day averages just over 33 points, about 33 and a quarter points. So the big picture averages give you an idea of what is reasonable to expect and anticipate. You're going to have losing days. We even track how many losing days we've had in each category, and we track what the biggest losing day was in each category to help us put a frame of reference around our trading. Trading can be a very emotional business, and what we're trying to do is to help you design a business that eliminates most of that emotion. If you had what you would define as a bad day, just plug it into your trading plan. Just plug it into your personal trading plan and see what your full 12-month projection is. If you had a really super strong day, you're excited about it, okay, that's great. Take that on, but still go and plug it into your trading plan and see how that affects your long-term forecast. The most important thing you can do at the end of the day is update your forecast. Update it daily so that on a daily basis, you, owner of your small business that's focused on trading, will understand exactly what your personal income could be over a 12-month period. By the way, when you invest the time in doing this for the first year, second year is much easier. You already have then a full year of history that will show you what your averages should be, and you're going to know how you're performing relative to those averages. This is all about building a long-term personal trading business that will help you forecast a reasonable income, and you've got a lot of flexibility and leeway in here in projecting your own income. If you're somebody who's comfortable trading 10 contracts, as many of our members in our community are, there's no reason that you can't achieve a 7-figure income, okay? And the 10 contract max, you're only going to hit that as long as there is sufficient capital in the account so that that margin requirement for 10 contracts will be no more than 10% of the balance of the account. So we're pretty excited about these two tools, the adaptive entry system, which is just the most comprehensive and flexible and easy to use trading system I've ever encountered. And then in addition to that, the personal trading plan, which will help you see exactly what your income could be. So if you're someone who wants to trade, maybe your job's been affected recently, maybe your business has been affected recently, or you'd like a little bit more security, you should invest some time in learning how to trade. It's one of the simplest personal businesses that you could set up for yourself, and you can start to develop a plan for what your income could be over a 12-month period. So I appreciate you tuning in. Those of you who are in our live trading room here at Options Moneymaker, appreciate the time that you spend with us. We're happy to help you in any way. But the adaptive entry system is an absolute must tool to have for every trader. And then the personal trading plan also. Those two tools, and you've got a really strong framework around a successful small trading business.